Silver, XAG, down 1.5%. Trendline breaks signals deeper correction. Silver slippery slide. Is this the start of a bigger correction? Silver investors, brace yourselves. Recent market action has delivered a stark warning. The price of silver, XAG USD, has slipped sharply by about 1.5%, breaking a key trend line and raising alarms that a deeper correction could be taking shape. But here's where things get interesting. The factors behind this move are setting the stage for debate, speculation, and perhaps a major turning point. Let's break down what you need to know and what most market watchers are overlooking. Over the past 2 trading days, silver has tumbled approximately 4.5%, weighed down by a roaring US dollar and fading safe haven demand. The US dollar's surge, coupled with climbing US bond yields, has created headwinds too strong for silver to overcome, at least for now. Why is the dollar flying high? Recent hawkish statements from Federal Reserve Chairman Jerome Powell, bolstered by robust US GDP numbers and a sizzling job market, are giving the Fed every reason to hold back on rate cuts. This more cautious monetary stance keeps the dollar strong and puts the brakes on any silver recovery in the immediate term. Earlier this year, silver enjoyed an extended rally for several reasons: heightened safe haven interest, a weaker dollar, and persistent market tightness due to supply and demand mismatches. However, with safe haven bids softening and the dollar pressing its advantage, only the supply-demand imbalance remains as support for silver. And this is the part most people miss. That imbalance is unlikely to resolve anytime soon, so it still underpins price, just not as powerfully as before. This leads to a controversial question. If demand for safe assets continues to cool and dollar strength holds, how far could silver prices ultimately fall? Some analysts argue that with just one of the rally's 3 engines still running, a sizable downside remains possible. What do you think? Does the supply issue alone provide enough of a price floor, or is further decline inevitable? Digging into the technical picture, silver recently topped out near 39.52 before being knocked back. Attempts to claw back losses early this week quickly fizzled, underscoring just how much sway Powell's Fed policy comments have over the market mood. A daily close below a rising trend line yesterday suggests sellers are firmly in control for now. Technical indicators confirm the pressure. The Daily Relative Strength Index RSI, calculated over a 14-day period, has dropped below the neutral 50 mark, though it's still not showing classic oversold signals. This leaves the door open for additional selling, potentially dragging silver down toward the 100-day moving average, around 34.60. This is a crucial level that traders will be watching closely. On the 4-hour chart, the narrative twists again. Here, the RSI shows deeply oversold conditions, which could set the stage for a short-lived rebound. If silver does bounce, expect resistance near the 200-day moving average at 37.24. and the 100-day moving average at 38.09. Interestingly, a 4-hour candle closing above 38.22 would challenge this bearish outlook and may trigger a shift in sentiment. Yet, until that happens, caution remains warranted. Key support and resistance areas to monitor include support 36.20, 35.26, and 34.60, 100-day MA. Resistance 37.24, 38.09, and 38.68. But here's the controversial twist. Some market participants remain bullish, convinced that supply constraints alone will soon drive a turnaround, despite current pessimism. Was this wishful thinking? Or are the bears getting ahead of themselves? What's your take? Do you see silver bouncing back on fundamentals? Or does technical momentum have the upper hand? Share your perspective. Where do you see silver heading next? Sound off in the comments and join the debate. About the author, Zane Vauda is a seasoned market analyst and educator with extensive experience across retail forex, economics, and financial market dynamics. After launching his career in sales and business development, Zane's fascination with economics and technical analysis guided him to the world of market analysis. Over the past 3 years, he has refined his skills in technical analysis, macroeconomic interpretation, price action trading, and assessing the geopolitical drivers behind global asset movements. Currently, Zane is expanding his expertise while pursuing the prestigious Capital Markets Security Analyst (CMSA) designation from the Corporate Finance Institute (CFI), where he has completed rigorous modules in fixed income, equity markets, portfolio management, capital markets, and derivatives. He frequently appears on radio and TV outlets in South Africa, offering commentary on international economic trends, and has contributed to Bankseta-accredited NQF Level 6 financial markets education programs. His diverse background makes his market insights both practical and approachable, especially for those just starting their trading journey. Silver price update. Impact of U.S. tariff deals, upcoming NFP data, August 2025 analysis. Silver investors brace themselves. Why Friday's critical data could make or break this recovery. There's a storm brewing for silver buyers as the metal dips 0.5% toward $36.50 in European trading. Here's where it gets controversial. Confirmation of U.S. tariff deals with key allies like Japan, the EU, and South Korea might actually be hurting silver prices. How? By calming global trade worries that once fueled demand for safe haven assets. 3. Remember when Trump-era tariffs sparked fears of a trade war? That panic drove investors toward assets like silver, as they feared economic instability. Now, with the U.S. signaling progress in talks with China, that stockpile and protect psychology is evaporating. The result? Reduced demand for these traditional hedges. 4. But that's not the full story. A thunderous surge in the U.S. dollar has added fresh pressure. The DXY index now sits near a 2-month peak around 100.00, making silver costlier for global buyers. Imagine borrowing $1 to invest. Higher borrowing costs equals slimmer profits. This dollar strength stems from Fed decisions, solid Q2 GDP numbers, hotter than expected PCE inflation data, and Jerome Powell's recent no rush for rate cuts signal. Higher rates slash silver's appeal in 2 ways. First, bonds suddenly become more attractive for yield-focused investors. Second, borrowing costs spike. Think of it as a profit haircut for traders. The billion-dollar question now, will Friday's non-farm payrolls data justify this optimism? Here's what to watch. The jobs report could either reinforce market confidence or reveal underlying weaknesses. If employers hired aggressively in July, the Fed might keep rates higher for longer. If growth falters, silver could see a rebound as safe haven demand returns. Controversy hook. Should central banks prioritize containing inflation over supporting growth? And this is the part most people miss. Silver's fate isn't just about tariffs and rates, but the delicate dance between global risk appetite and currency dynamics. Agree? Disagree? Let us know in the comments. Is the silver price correction over or just beginning? Analyzing SLV. Is the recent correction in silver prices a sign of a new beginning or the end of a trend? This year, silver has been on fire, almost reaching the $40 mark, capturing the attention of investors everywhere. However, it's essential to remember that price movements are rarely linear. Recently, silver has experienced a pullback, and it is approaching a critical juncture, both in terms of timing and pricing. In this discussion, we will analyze silver's performance through the lens of the Silver ETF, SLV. Currently, the price is hovering around a significant moving average, which could play a pivotal role in determining whether this recent decline is about to conclude or if it is merely the start of a more extensive downturn. For context, the charts referenced here are created using the tools provided by Investors Business Daily, a platform that offers a comprehensive suite of resources, including educational materials and both technical and fundamental data. When we examine the SLV chart, it becomes evident how swiftly the ETF has declined. It has dropped below its 20-day moving average and is now approaching its 50-day moving average. Typically, We would expect to see some level of support at this point. However, we cannot dismiss the possibility of a more profound correction if this support fails to hold. On a more optimistic note, all three major moving averages are trending upwards, which leads me to believe that the $31 to $32 price range could provide a solid support level if we reach that point. This range corresponds to the highs observed in October and March, as well as the price gap noted in early June. Feel free to follow me on Twitter for more insights, @AndrewNyquist. It's worth mentioning that I may hold positions in the securities discussed at the time of this publication. The opinions expressed here are entirely my own and do not reflect the views of any other individual or organization. Now, let's open the floor for discussion. Do you think silver is poised for a rebound, or are we just witnessing the beginning of a more significant decline? Share your thoughts in the comments.